Thank you, David and Corey. I'm Eric Costa of Cambridge Associates, and I'm a co-chair of the Boston Investment Conference. I'm thrilled to welcome our next speakers of the day, John Chambers and Dave Furneaux. John Chambers is the founder and chief executive officer of JC2 Ventures, helping disruptive startups build and scale. He was appointed Global Ambassador of the French Tech by President Emmanuel Macron. He is also the chairman of the U.S.-India Strategic Partnership Forum. Prior to founding JC2 Ventures, he served as CEO, chairman, and executive chairman at Cisco Systems. Mr. Chambers wrote Connecting the Dots, Lessons for Leadership in a Startup World. He serves on numerous boards, including OpenGov and Pindrop. Dave Furneaux serves as a CEO of Virsec and on the company's board of directors. Previously, he founded Kodiak Venture Partners. Recently, he founded Blue.io, an innovative, mission-driven investment holding company where he participated in the formation and building process as a co-founder and investor in a core group of companies, including Greenlight Biosciences and Lufa Farms. Dave and John, welcome.
It's great to be here.
Yeah, it's great to be here. John, I'm excited for today. I've been looking forward to it.
For a very long time. First, it's a great cause, and I want to thank everybody for giving back. And I think it's so important that the business leaders do give back generously to society. Secondly, for me, it's great to be back in Boston. I was with Wang Laboratories for 8 years. Dr. Wang was the most brilliant man I ever met in my life, and I learned both the good and the hard way, how important it is to get market transitions right. I was there at the time Larry Bird was part of the Celtics, so just all great memories. And I'll try to do the best I can to make this both entertaining and challenge people. If you agree with everything Dave and I say, I think we failed miserably. Want to make you a little bit uncomfortable, talking about the trends of the future and lessons of the past.
Thanks, John. And it's really great to be here supporting this effort with Boston Children's. Having been a long-time Bostonian, it's just so meaningful to be part of this community and see the great work that's being done. John, your friendship means a lot to me. I was excited, as I said, to have us come together, but also your mentorship. And before we kick off and we jump into some questions, I'm going to take you through a series of questions. I want to, for the audience, take them through a little bit more on your background and really kind of complete the picture a little bit, because I think your background is so interesting in terms of how you've participated in the technology world over this period of time here. You mentioned Wang in Boston, but you also were with IBM and working in the mainframe world, and then you went to Wang and the mini computers, and then you went to Cisco, where you built the #1 company in the networking and the internet infrastructure in the communications world. And what was amazing about your tenure there was your 15,000% return during your tenure, your growth of that company from $70 million to $47 billion while you were there. But one of the things that you pioneered was, as you were organically building the company, you acquired 180 companies. And you really figured out how to integrate companies in a way that few other companies and leaders have done over the last generation. And so maybe we can talk about that as we jump in, but that background was amazing. And then I've seen you leave that role where you made your mark there with Cisco and turn it with your passion into JC2 and building a successful investment platform where you've got, I guess, over a half dozen unicorns now, over $1 billion companies in value, and a really strong portfolio building that we're happy to be part of. So it's really great to have you here. You said, don't be easy on you. You said, let's get into it. Let's make sure we mix it up for the audience. I think I'm going to jump right in and start with successes, challenges, and failures. And so would you mind just jumping in and talking with us about when you think back on your career, where are the places that jump out at you where you had your biggest success, your biggest failures, your biggest challenges?
So in the sequence you raised them, and the good news is, as you said, I've gone from mainframes to mini computers, client servers, the internet, the cloud, now the cloud moving to the edge, AI. I've seen every movie. I've made every mistake there is to make. And what we did at Cisco was, I think, most exciting from the perspective of how we not only became the most valuable company in the world for a period of time, but how we had the highest customer satisfaction in the whole high-tech industry for 2 decades, how we had a family environment for our employees. We watched out I knew every illness of all 75,000 people in the company, their spouses, their kids. We built a great culture. Our attrition rates for 20 years ran 5%. Our attrition rates of our acquired companies ran 4%. You all know what a challenge that is, especially when you're located in Silicon Valley. We created 15,000 millionaires. We shared our success with our employees at that level. We won every corporate social award there was to win in the world from both the Democratic leadership and Obama and Clinton, Republican leadership, a Bush and a Rice. We won the awards in the Middle East, in China, et cetera. And every place we were number one in corporate social responsibility, we were number one in terms of market share. We were number one or two in 15 of 18 major product areas. We reinvented acquisitions. Most people thought acquisitions in the early 90s, as my board said, almost all of them fail and your stock will go down. And then when I did one, they said, just don't mess the first one up. I think most people would agree we were the most effective in the whole industry about acquiring, making them work, keeping the people, and then getting market share. Our average market share in our 18 product areas was 40%. So pretty good execution. The culture was probably what I was most proud of, how we took care of our people, our customers, how we created a win economically for our shareholders and for society as a whole. I made a bunch of mistakes. And any CEO would tell you who's been in the saddle very long, the mistakes you remember forever. The successes you almost kind of gloss over and you wish you could avoid the mistakes. The biggest one I made, and it was a whopper, is for 40 quarters in a row of reporting on our earnings. Our average growth in that time was 65% year over year. It was a real rush. And we hit our quarters every time 1, 2, or 3 cents over what the consensus was. We never, in the entire time I was there, missed the range that we gave to the market, but only one time were we below the middle of our range. And what happened was in the year 2000, before the dot-com bust, which affected high-tech companies, unfortunately, across the world, I was growing at 70% year over year in the first week of December. We were so good on our analytics, we could tell our quarter growth based on the first week of the quarter. We could tell our year growth going into it, plus or minus 2 or 3%. And we did the connecting the dots based upon the prior geographies, the prior number of sales reps, the countries, the momentum, the pipeline with tremendous accuracy. The mistake I made was there were security warning signals in the market, but there'd been many times before. My numbers had never lied to me. But what I did, I kept doing the right thing too long. 70% growth. I'd level set the market the next quarter, 35% growth. Would never, I thought I was really very, very conservative. And long story short, in a period of 45 days, we went from 70% growth to minus 35%. 25% of my customers disappeared forever. I wrote down $2 billion in losses in terms of inventory because of supply chain issues, which took us 2 years to finally get enough supply. And then within 2 months, the bubble burst on it. And I should have seen it coming. I was able to see most of the other changes. The pain was tremendous. We could do nothing wrong when every award imaginable, and suddenly people were saying, John, maybe you shouldn't be CEO on it. And you always want to listen to your critics because they always have elements of fairness to it. We made our decision to make our changes. I did it after traveling around the world for 2 weeks, came back, and I was convinced it was a 100-year flood. Nobody else had readjusted at that time. And I shared with my board that day that I was going to announce the reorganization of the company that afternoon and close the market. and that we were going to do everything within 51 days. And we did. We unfortunately decreased our headcount by 7,854 people. Those were my family. I'd hired most all of them. Painful like you would not believe. Our stock dropped dramatically for the most valuable company in the world in terms of the direction for our shareholders. Our customers stuck with us, but I should have seen it coming. And so you learn from that. And the good news was when the Great Recession happened in 2008, we called it. We called it 6 months before anybody else did. We positioned our company for it, but I'd learned from my mistakes. Key message, doing the right thing too long. Do you learn more from your successes or more from your failures? Jack Welch would say, and he told me multiple times, you're never going to have a great company or be a great leader until you have a near-death experience. Unfortunately, he was right on that. And as a leader, for those of you who are leaders of startups or other companies, leadership is really lonely. Everybody loves you when it's going great, but when things get tough, Dave, as you and I have talked, you're by yourself, and you've just got to learn how to navigate through that. And that's part of being a leader. And if you can't handle that, candidly, you can't lead the companies in today's world.
That's good advice and great reflection. Now you've made this transition into being an investor. I have to say, though, having experienced your style of investing, I think of it more as builder capitalism than venture capitalism, because you're not looking to take risk. You're looking to get involved with a group of companies and build them alongside the entrepreneurs and the teams, because I see that's what you're doing. And so with that model that you're building, it'd be great for the audience to hear how that's going as you've made the transition from leading Cisco so successfully, and now you're in this role. How's your scorecard? How are you thinking about it? What is it that's getting you excited about it?
Okay, so 6 questions. Let me see if I can hit them in the sequence you raised them. What I love most about Cisco was disrupting markets. And we took on the giants that we had no chance of beating, the IBMs, the Intels, the Dells, the Nortels of the world, the Alcatels, et cetera, Lucent. And we did it by simply catching market transitions and then innovating quicker than others and then translating technology into business outcomes. The internet changing the way you work, live, learn, and play. It wasn't a marketing tag. We weren't selling routers or switches. We were selling transformation of business. The second thing that I look for when I acquire a company, and true about today when I invest in a company, is the CEO. Do they really get it? Do they want to be coached? Do they have a strategy and vision I buy into, but also do I like their culture and their approach? And are they really open to having a strategic partner? They can get lots, in especially in today's world, you can get more money than you can dream of right now very easily. But do they want a business partner? And very candidly, most of the time when I invest at a very fair price, and usually get options as well from the advisor side, because if I'm not advising the company, I really don't want to invest in terms of the direction. The third thing I look for is there a company, and the same thing with acquisitions, that is within 1 to 2 years of an inflection point. And so you try to catch the companies right as they have a chance to take off and really grow with the pace. And then I go straight to the customers. I'm an enterprise guy. I can talk to any CIO or any enterprise CEO in the world pretty easily, or service provider or government lead, as you said earlier. And I'm very close to governments around the world in terms of how you digitize in India or France in terms of the direction. So then what I look for that is different is it's all my own money. It's about $100 million we have invested in it. We've been very fortunate so far. We're early stage investors all the way through Series B on it. Our IRR, which would be of interest to the VCs in the room, is running about 40%. And we're just now starting to hit some big companies, one of which is going to be yours, that suddenly can go up 10x on it. So I expect our IRR to continue. We do invest early. We've got 6 unicorns already. We should have 4 to 6 more in the next 12 months if the market just stays where it is as they raise funds on it. So that would be 12 out of 20. We'll see how many of the other 8 get there or not on it. We probably have 3 or 4 of you that have a good shot at being decacorns within 3 years in terms of the growth. I say that more in terms of growth opportunity. I'm looking to add headcount. What's really driving me is that the big companies of the world will not add headcount over the next decade because of the productivity and the technology that many of us in this room are inventing. And it says that all growth, whether you're in India, the US, or in France, where I'm heavily involved, will come from startups and companies getting bigger. And I'm an optimist about that, but it requires a whole different startup engine, a lot of concentration in terms of the direction. I'm like a kid in a candy store, as you know, Dave, endless energy, and I apologize for that. I know I drive you crazy at times, but I've never had more fun in my life, and I don't do anything I don't want to do. And so I'm having a great time with 20 young CEOs that I really believe in, and we're joined at the hip in terms of how do we win together, how do we grow the companies, how do we give a return to our shareholders, to our customers, to our employees in this process, and how do we give back to society like today.
It's great. John, when you think about areas that you're investing in, you talked earlier about markets in transition.
Yes.
And can you talk about an example or two of markets, if you were to even force rank what you think are some of the most, the markets that need to be or are in the middle of becoming disrupted or are in transition? If you could talk about that, I think that would be interesting.
Well, it ties back, and just I always like to both talk in theory what I think is appropriate, but also tie it to results. And it's when you can say, here's what we predicted, and then here's what happened. Then you have credibility to say, here's what I think is going to happen next, and here are the most likely outcomes. So at Cisco, we bet entirely on market transitions. I didn't sell technology. I sell business outcomes. We bet the internet would change every aspect of business, our personal lives. People said, nice marketing, but that's not going to happen. You make routers. And I said, watch what happens on it. Yeah. And we rode that wave in a big way. Amazon will tell you their biggest issue when Jeff took them public was in 1984. He said, I had to explain to everybody what the internet was and how that was going to completely transform the business model of how retail is going to interface to customers on it. The next big wave that we rode was as data was over the internet, as voice and video went to the internet, voice was going to be free. And I wasn't very popular when we acquired several major service provider technology companies, Stratacom being one of them, and moved into service provider, and then telling our customers that 90% of where their revenues and profits were was going to disappear, and not only commoditized, be zero, because it was such a load on the internet. And that's where we displaced the Nortels, the Alcatels, the Lucents of the world with tremendous speed, because they stayed with an old model and missed how this was going to occur. Didn't understand the implications. The business model changes with the new technology, with voice going over the internet, and that it would be free on it. Next big bet was digitization, 2011. I was early on that. I said every country will be digital, every company will be digital, and people just like the internet said, what do you mean? And what do you mean? Every company is not going to be a tech company, but a digital company. And it wasn't until about 5 years later that began to take off. And that's why I'm so connected to France with Macron. He got it, how digitization would allow France to move from the worst place in Europe to do business to the best in a startup engine. We had the courage to go for it. And so to be his wingman and do that announcements first when he was economic minister and then now as president is a tremendous honor. And with Modi, he would say, I'm not only his trusted advisor, I'm his digitization partner, and very, very close to the leadership across all of India in terms of the transition. So when I think about catching those, that's what I look on. If I look forward in 2015 at the World Economic Forum, I said there are only two types of companies per earlier speaker so that talked about it, those that have been hacked and those that don't know they've been hacked. And it took people a little while to understand what I said. It basically said security is going to have a huge upturn in terms of hackers, nation states, et cetera. And if we don't find a better way to protect it, it's going to slow dramatically the growth in tech. I think we all understand the implications of that now on it. I try to hit these transitions 2 to 3 years out. The biggest bet I'm making now is on digitization, really coming forward with artificial intelligence. I think AI will have the same effect on the industry and machine learning that the internet did. The biggest bet that I will make will be in that category. The second biggest is on cybersecurity. I think it is set up for somebody to consolidate this industry. I'm counting on that being you, even though you're an early stage startup. I think you have the platform to do this if you execute right. And the fact that you've already sold 2 of your companies to me at Cisco when you were CEO. You've been a venture capitalist, and now with Virsec. I love your strategy, your platform, and so I'm going to try to play a role where 8 of my startups are in the security area. The other bet I'm making big time is the cloud moving to the edge. That's where 75% of the data will be processed. Security has to take place, the storage, most of it won't come back central cloud. All of a sudden, Amazon is vulnerable. They can be displaced. One of the startups, Pensando, is an order of magnitude better in terms of throughput, in terms of number of transactions, connections, et cetera. In other words, 8 to 15 times better than Amazon. And you put that into a company like Oracle or the other cloud players, all of a sudden you see them start to really jump in terms of what can happen. And you're going to see many of the cloud players probably bet a large part of their future on this small startup called Pensando in terms of direction. So those are the areas that I'm kind of couching my bets. I'm making some long shots on next generation supply chain, and too early to call which way those are going to go.
Great. Yeah, that's a really interesting lens you're looking through. And your context was helpful in thinking through how you approach things as you move forward. You mentioned Modi, and you mentioned India. Can we touch on that a little bit more and talk about where we think India is going as a partner to the United States and independently as a country, and what those implications might be as we think through them?
Well, I've always believed, and probably many of my peers in this room, virtual room, have believed that India was going to be the next China in terms of economic growth, and definitely growth in high tech and place to invest. However, it was always a slow follower. Even when I made India Cisco's second world headquarters over almost 20 years ago, 15 years ago, it wasn't taking off as fast. This is where I think the VCs in the room will get it. You bet on the leader. And when Modi came to power, and I watched what he said, and I went over and met him, and I was asked to chair the U.S.-India Strategic Partnership Forum, equivalent of that in the Business Council. At first, I turned it down. And then I said, this might be the dumbest thing I've ever done, or one of them. And as I got to know Modi, he outlines his strategy and vision for a digital India, and it's him. He doesn't have a team that does it. And then we got together and we outlined, what does a digital country mean? What does it mean to job creation? How do you create 1.2 million jobs a month? How do you do smart cities? How do you do startup communities across all 29 of their states and their 7 territories? How do you do this without damaging the environment like China and the US and Europe did in their economic growth? He's the total picture. Does he make mistakes? Of course, any leaders do, but he's in the top 3 leaders I've met in my life, and one of the most visionary in terms of direction. 5 years ago, we said that the most strategic partnership between the US and any other country in the world should be India. Almost no one agreed with that at that time. And yet today, I think you would find that most of our leaders in defense and many of our political leaders on both sides of the House have realized that it was occurring. I just got 2 texts for 2 senators who are headed to India, and they said, John, talk to me when you're in the car after this session and give us the background, the people, et cetera. I know their entire leadership team across both the ministers by state, but of the entire team for Modi. If you're betting on one country in Asia, bet on India. If you want to double down, bet on India twice. They're going to do amazing things over the next decade. It's exactly where China was in 1995 when I bet huge in China. Is my first real big decision, controversial one, at Cisco. It worked out extremely well for me. And candidly, at that point in time, the Chinese delivered on every commitment they ever made to me. That's not necessarily true in today's world, but there for 15 years, it was a great partnership. I think India can mirror that, but at a dramatically faster pace, and candidly with all the advantages of a democracy and some of the challenges of a large democracy.
That's great. Let's talk real quick about innovation.
Okay.
You were at Wang during a storied time. It was Route 128, the mini computer, the PC revolution, and the innovation in Boston was an all-time high. And then we saw a shift, and you went to Cisco, you went to Silicon Valley. Maybe with that as a backdrop, and maybe you filling in the history, understanding your view on where's innovation going to come from today, and how do we capitalize on it? What does that new structure or that new innovation world order look like from your point of view?
And where's it going to occur? In the
Yeah.
sequence you raised it, just a quick note on IBM. I'm here at their headquarters today. They've been one of the few companies that have come back after they slid out of leadership and then started to come back and be an economic power again. Yeah. Most of the time in high tech, when you slide, you go sideways and eventually down. Dr. Wang, as I said earlier, I love the man. I was his partner. He trusted me completely. He gave me Asia to run when there had been no other leader ever running China that wasn't Chinese, and he trusted me to do it. And I think he had a little bit more confidence in me than I even had in myself, but it was the most learning experience ever. He got every transition right, built the products himself, did it with key companies in Boston, as you all know, and New York. And when the transition came, moving to client server, he actually allowed me to push him very hard. And it's the only time he ever got mad at me when I said, Dr. Wang, we're really a software company and we've got to move to client server architecture. And he said, John, I built the PC, a client server 5 years ago. Nobody bought it. We didn't have the applications for it. And I should have pushed harder. But when we missed and 32,000 people lost their jobs, I understood then markets wait for no one. And you either disrupt or you get disrupted. And you don't keep doing the right thing too long because it inevitably will cause you to fail. Boston, for my friends there, and I know I'm going to be controversial, we had the best high-tech industry in the world. We were the Silicon Valley of the world, and we knew it. And when Silicon Valley started to come out in prominence, we thought there's something unusual about those people out in California. They're not really a threat, when in fact the reverse was true. We quit reinventing ourselves. We quit looking at market transitions. I love MIT, but MIT began to lose its leadership in terms of catching key technology trends, et cetera, on it that were very painful. And we in the VC community did not, I think, help as much. Now, where's the market going? Many people, when I came to Silicon Valley, 70% of the venture capital in the world went here. Silicon Valley's in trouble. I think we are very likely to be displaced in the next decade. We've got a non-supportive government in California on it. Cost of living is extremely high, and over-regulation, I think, will push companies out of here at a faster pace like you've seen to Texas. And for startups, which used to all want to come to Silicon Valley, they're now saying, why not Montana? Why not Texas? Why not Miami? Why not West Virginia? And so I think you are going to see a change. I think that's healthy. I think if you believe that startups are going to be where the growth is going to be in job creation, if you don't move these into all 50 states and move them throughout Europe and Asia, then you're not going to have middle classes. And when you don't have middle classes, that causes economic issues. And candidly, that leads to major political problems between countries. Now, can I switch directions for a little bit and let me ask you a couple of questions? Is that okay?
Yeah, turn it around. Go for it.
Okay, because Dave, you're one of the best CEOs I've ever seen, but you're unusual. You've been a venture capitalist, a CEO, a venture capitalist, CEO of multiple companies. You've made them successful again and again. I bought 2 of them at Cisco, very comfortable with them. I trust you with my life. That's how much I believe in you. But because you've been on the VC side and the serial entrepreneur side, and now you're starting to build potentially what could be the next great security company, and maybe even the consolidator of that, but you and I share the common dream. What were your lessons learned combining the VC experience with the serial startup experience with what you're trying to build now, which is a great company, not to sell to somebody else, but to really perhaps lead an industry? Share with the room what it's like on both sides. As a VC, what did you learn about advising companies? And as a CEO multiple times, what did you learn about the VCs and investors, where they could help you, where they would hurt you?
Sure. Well, if you think about it, the entrepreneur and the venture capitalist, if the venture capitalist is really good, they're builders. They're helping that team build their company. David, you gave me a shout out as you were leaving and I was coming. David Fialco. General Catalyst is a builder firm. They build companies, they invest capital, and they build them. So we always look at, can we help affect the company? And that's what you do. You're a builder capitalist. You're affecting the companies that you're investing in because of your expertise and your passion. But as an entrepreneur, as Corey was talking about his commitment to cybersecurity and his leadership role in running his very, very important and very great company, Rapid7, it takes that passion and that commitment and that focus, and then building a team around that shared vision to bring that forward. But that really, there shouldn't be a line there. That's a community that's being built for that company to succeed. And that community includes the investors, the advisors, and the board, along with the team that's being built. So I think at the end of the day, as a leader, but you tell me, because you're my mentor, it's about alignment, and it's about shared vision, and then it's about execution and accountability. And if you bring those things together, you can make progress and you can do something important. Blue IO, which is my investment holding company, we took that view of builder capitalism to building a core group of companies. Greenlight Biosciences has announced that it will be newly public company soon here in the Boston area, focused on securing human health and plant health. And Lufa Farms is focused, they're about a 700-person company, profitable business up in Montreal, Canada, that we helped start and that I chair. And we're focused on securing the food supply chain. But Virsec, as you said, is my passion. My passion is cybersecurity, and in looking at how to attack this problem in a different way and coming into a market that you and I both share, we feel is in transition. And so it's an exciting time for our small company, and we're working on staying focused and coming into it the right way.
So putting you on the spot a little bit, and first I'll give you a compliment, then I'm going to give you the hard question. And I've probably introduced you to 10 major strategic partners and at least 25 enterprise accounts. You've never missed. And you can say, well, you're really good at sales and you've got a good story. It really says there's something unique happening in this market and you're really differentiated. When you talk to a startup, and sometimes I almost want to cry because I turn to them and say, tell me what market you're in. What are your sustainable differentiations? Why are you going to win? And how are you going to develop the number one position in your segment? And people really struggle with that. Give me the 2-minute pitch on Virsec, but more what I'm after is kind of being an example for the people in the room, both the startups and the VCs. When you really see world-class CEOs, they have this down. And sometimes when you talk to them, especially if they're maybe an engineering background, at the end of their pitch, I can't get the differentiation. I don't understand what their culture is. I don't understand the quality of their team. 2 minutes, and don't be humble, please.
Geez, John, you're putting me on the spot like that? Man. All right, I'll do it. Virsec is an interesting company, but I think of what we're doing more as a movement than as just building a company. I believe, and we're about a 200-person team today, and our entire team believes that we need to approach cybersecurity in a complementary but additive way to what's going on today. So I'm not necessarily saying we need to throw away what we've done in the past. We need to build upon it. We need to bring a more in-depth, integrated approach to how we secure the infrastructure. So when you think of the infrastructure, what is it? It's software. Mark Andreessen said it 20 years ago, or probably longer, that software is going to eat the world. It has. It's in the middle of every one of our lives personally. It's in the middle of running this hospital that we're raising money for today. It's in the middle of all of our companies and governments. And so if you look at what is insecure, it's the software that's running our critical infrastructure, our militaries, our government, and our companies. And so we looked at it and said, let's be leaders in figuring out how to fully protect software. If you can fully protect software, then we can start working on getting more control around the problem itself. And it turns out it's a simple idea, but it's in the elegance of how you do it that makes it work or not. And so we spent 3 years working on this issue of protecting software. And I'll just describe it in a really simple way. If you want to protect software, you have to fully understand it. And so we built an elegant solution, a product that dynamically and quickly will understand everything about the software that's running. And once you understand everything about the software, then you can fully protect it. And then the problem is more about, can this work in my environment? Can it scale? Can it maintain itself? Can it perform well? Does it not do any harm? And does it really do what it's going to do? And so we've brought this to market just in the last 7 quarters. And we've had it tested thoroughly by classified organizations, and obviously many demanding public-private sector companies as well. And now we're shipping the product in 13 countries. We are shipping it in the US government and military and in 4 other governments as well that are allies to the United States. And we're starting to roll the product out. And that's what it does. It fully protects software while it's running from being attacked. So when you think of ransomware, you think of new types of attacks. You will not see those get through this defense. And so are we solving the entire problem? Of course not. I think that Corey knows better than anybody who spoke just before with David that it's a very complicated problem. But I think we're making a huge dent in the problem, and we're coming in to complement what's there.
20 minutes.
Okay, let me ask one question before I give it back to you in terms of the direction.
Sure.
I believe industries consolidate. You start off with a whole bunch of players. In the internet, we started off with 4 horsemen and 100 other companies. Big companies came out at others, and it sorted down to just a few handfuls. Galley, one company, we were fortunate enough to break away. That always is what happens. It happens in cloud, as you know, et cetera. It happened in client server direction, et cetera, on it. Cybersecurity is set up for consolidation, and yet no one has. And if I stayed at Cisco, I made cybersecurity my number 1 priority 2 years before I left the CEO role. Yet that just has not occurred. And until you probably get a consolidation with leaders that tie these pieces together, it isn't going to happen. Is that too simplistic? And secondly, if it's obvious that that's where it should go, why is it not happening?
I think that it has to get built around a Trojan horse. The Trojan horse is protection. So a new protection architecture, if it scales and it's very effective, does have the capability to bring around it the vertical integration of security. Because if you think about it, and it was touched on in the session before, security has implications. You have to understand your risk. You have to protect your environment. You have to comply with the complicated world that you live in. And then you need to ensure and recover. And if you can bring all those things together, with the protection being at the center, you do have the potential to really change the game and to bring us to another level of protection, which I think of as our 3.0 maturation of cybersecurity, 1.0 being the firewall, 2.0 being using artificial intelligence, and 3.0 being what you're going to hear a lot from us is called determinism, the ability to protect fully in runtime or while the software is running from attack. And so I think we have an exciting couple of years ahead. I think the industry is in transition, and we're excited to be part of it.
Last question for you, then I'll give it back to you to quiz me a little bit further. What's the one lesson you could share with the audience that you wish you knew 15 years ago that would have really helped you both as a VC and as an entrepreneur, and you probably have had an aha moment? I wish I just understood that.
It's probably an age-old thing, which is as you get older, you get more patient because you have perspective. And so when you're younger, you move quick and you grab things and you go. I think as you mature, you start to get more patient, but that doesn't in any way mean you don't move as quick up here and with your teams, but more strategic in the way you want to build. So for example, with Virsec, we could have sold the company as we were starting to build it. But we said, no, we think the chess moves are to build it, to disrupt the industry, and to take a longer view. And I think that's probably one of the biggest things I've learned is take the longer view.
Let me flip the ball back to you, Dave.
Thanks, John. So we've got a little bit of time remaining, a couple of minutes here. When you think about one area I wanted to touch on was understanding your influences. When you think about as you've come forward, done all these amazing things in your career, and you've built your career, when you think back, what would be some of your key influences, people or situations that you were through? I'd love to hear that.
I think one of the most important things that I learned, and I think it's one of the things that we all in the venture capital world need to do a better job of, is mentors play a huge role. Both those that your investors help you find, but those you find in markets. And it will shock you. You never know where those mentors are going to be. Who would have thought of Thomas Friedman out of the New York Times would be a mentor and I'd learn from? Shimon Peres out of Israel, and he taught me over 17 years so much about leadership and direction. Republicans and Democrats, but probably the one that got it the best was Bill Clinton. He understood the internet. He understood how it would change jobs and creation in this country, how it could do it over a decade plus. And he was the champion and candidly very closely aligned in terms of the direction going forward. Jack Welch, tougher than I am, but clearly somebody that I learned tremendously from and lectured in Crotonville for him and learned so much on many things, including being number one or number two, and also about you're never going to have a good company or be a strong leader until you have that near-death experience. And unfortunately, he was right, as painful as it was. I could go on and on with key executives that I've learned from and from startup individuals like you. And you know a couple of the startups that I have, I learn from each of you every day. The issue that we often miss is we don't connect our startups with leaders and mentors. And this is particularly true on minorities and particularly true on gender. Many of the women will tell you that they don't really have a mentor. Many of us in the VC world, we know what percentage of VCs are female on it, and it's something we've got to change. It's just wrong economically, never mind society. It's just not good business on it. And part of that is, how does a mentor really change your role and what value do they add, both during the good times and the tough times?
That's great. How about on the topic of leadership, lessons you've learned that you'd like to impart on the audience around leadership?
Well, when you said you've learned patience as you matured, I was sitting here saying, I have no patience, and I don't think that's ever going to change. So I've got to watch that a little bit. But, when you really think about it, for me, I often moved very fast early on in my career, and I'd figure it out along the way. What I've learned now is I develop playbooks for everything I do. And a playbook can be as complex as how do you do acquisitions, or it can be how do you identify which companies you invest in and how do you develop the CEOs and what do you look for them, et cetera. And I would have normally said that is bureaucracy, it slows you down. And that's what often CEOs say, that I'm coaching a little bit, when in fact it allows you to move with speed. Something everybody in the room would get, out of the 180 acquisitions, I could get a call from the NASDAQ on a Thursday night, and the head of the NASDAQ says, John, you're an idiot. And I said, I agree. What did I do wrong now? And he said, everybody knows this company is going down and there are multiple people after him, including many of your competitors. And this is perfect for you. And I was deeply embarrassed. I didn't even know what the company did. But I said, can you give me the CEO's number? And I called my head of business development. I felt better. He didn't know what the company did either. We met with him the next morning. I had a handshake at noon for a $3 billion acquisition. We were through both board of directors, teams on board in their location, contract, golden handcuffs in place by Monday morning, and we were done. And $3 billion. And fortunately, it worked well. Yeah. That is a replicatable process that you can just turn like a crank and do quickly. That's what I do with my startups. I have a process that works, and I do it faster and faster and faster, process of developing an ecosystem and how you move forward. So I would say that's one of the things that I've really learned. A second thing that I've learned is that people might have said, John, and partially in criticism, and IBM gave this to me originally. They said, John, you try to do 10 things, and we just want you to do 3 really well. And, when I do 10, 6 or 7 work, 2 or 3 are jump ball, and 1's all over the floor. At Cisco, people at times, fairly, said perhaps you spread yourself and your company too thin on it, and you dream too big. And thinking about it, I actually understand the criticism, and I've got to have a replicatable process to make it work operationally. Otherwise, you can't play on that many fronts at one time. But I am a Shimon Peres believer. There's no room in the world for small dreams. And if I had to do over at Cisco, I would have dreamed bigger and take more risk. And I'm definitely doing that with the startups. And it's what I challenge everybody in the room. Our country's losing. How do we dream? How do we share that dream and success with our society at the same time? And they must go hand in hand. If you don't, government's going to regulate us really tough in terms of the direction. But I think we as a country are losing confidence in our ability to dream and to compete. And I clearly understand where China is, and 15 of our top 20 areas in technology defense, hey, they're leading us, and we only lead in 5. But I think we've got to dream again and then say, how do you make dreams come true, and how do we make it come true for all Americans, not just Boston, Texas, and Silicon Valley?
John, thank you. Time flies when you're having fun. We're over. So it's
all right, last question if I can, and I apologize.
Yeah, go ahead.
I'm going to challenge the room. Very often people do not give because nobody they know and respect ask them. Secondly, they don't give because they don't think they can make a difference. And third, if they give, they don't see the outcomes. With Boston Children's Hospital, you have a chance to do all 3 of those. I think it's important, especially for the VC and the tech community in today's world, because we're not viewed well in Washington and around, is to show that we care as much about economic success, but we also care about a benefit to society. I know I'm speaking to the choir for most of you who are already given, and I'm giving to the Children's Hospital in Boston as well. But I'd say dig a little bit deeper. Really make a difference, and not only produce great economic results out of your investments and dream bigger with those investments, but dream on giving back to society at the same time.
Thanks, John. I second that sentiment and appreciate the time we just spent. Thank you.
Fun as always. Thank you, Dave.